Hey guys, how's it going? It's Andy from Go Investing. Happy Monday. In today's video, I kind of wanted to discuss what's been going on in the stock market for the past week, and then talk about the potential that I see in the upcoming weeks for the stock market. The past couple weeks have been an absolutely wild time. We had an incredible drop with a market recovery last week, and now I'm starting to get a lot of questions on people asking which direction I think the stock market is going to go for the upcoming week. So in this video, I thought I'd address that topic and kind of give some evidence for both sides of the argument, because if you go online right now, there's a lot of people that are very passionate about both sides of the argument. Some people saying that the market's going to continue to go up, and some saying this is a kind of a fake out and that the market is going to continue to fall in the upcoming weeks. So after the crazy fall of the beginning of this month, last week was the best week for the stock market in the past 82 years. And when I saw that headline, I was just kind of shocked. I've just been so used to just kind of assuming that the market had been going down, so that when we had those crazy days last week, I kind of pushed them to the side and didn't pay too much attention to them. But I got an email from the Wall Street Journal saying that, and as a result of the crazy push up that we saw last week, we had the shortest bear market in the history of the stock market, which was kind of a shock to me, considering we just came out of the longest bull market in history. So seeing that was kind of an eye-opener. So I kind of wanted to discuss some of the factors that have pushed the stock market in this direction and kind of give evidence for both sides. Before we get started, I got to say that I'm not a licensed financial advisor, and I highly recommend talking to professionals, someone that can find you the best places to put your money going forward. In addition, I really appreciate if you hit that like and subscribe button. It would help my channel out a lot. This video is going to be a lot of my own opinion, so do your own research before making any decisions. So in the past week, as the stock market has jumped over 12%, I've gotten a lot of comments of people asking me if I thought this was a bull trap. A bull trap is something that happens in the stock market when things are falling, and after you've had a downturn for a couple days or weeks or even months, the stock market starts to go up for a little bit, and people think this is the bottom and that things are going to start turning around. And so people buy into the stock market for it to fall right after that. So it's the bull trap, because people think that it's going to be a bull market, they start buying in, and then the stock market kind of flips on its head and continues to fall. So when I saw people asking me about that, I kind of wanted to see the arguments for both sides, because at this point, the stock market fell a lot at the beginning of this month and then had an incredible week. So there's signs that are pushing me to believe both sides. I was planning on making this video over the weekend, but I thought I'd wait until Monday, because as I've talked about in the past couple weeks, is that Mondays have been bloodbaths for a long time. And the reason behind that is the stock market closes on Friday night and then doesn't open until Monday morning. So it kind of piles up 3 days worth of news events, and it all just kind of goes into the stock market on Monday morning. So it's normally very volatile on Monday mornings. And after the news events that we've been seeing with how the virus has been affecting the US, I was expecting the market to open pretty low this morning. However, let me just double check. Yeah, NASDAQ's up 3.5% right now, so I've been really surprised by that. Looking at the stock market today, pretty much everything's green except for the energy sector and travel stocks. Travel stocks as a result of everything being shut down, and in addition to crude prices going below $20 a barrel for the first time that I can remember. So there's been a huge price war when it comes to crude, and it looks like the US oil producers are going to be having a really tough time, and it might mean that they could fall from being the #1 producer in the world as a result of the Saudis fighting against the Russians for their price war right now. So we're going to have to wait and see how that happens. Also, a news event from this weekend, United had a jump last week when they said they're going to need help from the government to make it through this really tough time. And then they got aid from the federal government, and then immediately announced that they're going to be laying off people in September after the stimulus package effects are going to start wearing off. So the stock market did not really like that, and the company is trading lower today. But besides that, it seems like pretty much every other company on the stock market seems to be up a decent amount. Okay, now I want to talk about some of the reasons why people have been arguing that the stock market may continue to go up. And the first one is the fact that we just had the best week in the stock market in the past 82 years. When you see something like that, where the stock market's been around for such a long time, when you have the best day in 80 years, you kind of have to take note of things, because that is a really rare thing to happen. Sometimes we have, you see a news event that says, oh, that was the best day in the stock market in the past 3 years. 3 years seems like a decent amount of time, but then when you look at 80 years, you're really going to have to take note of that one. This past week was a result mainly of the markets kind of overlooking the news event that we had a record number of people filing for unemployment, but we also had the news going through that the stimulus package was going to go through, and it was going to help a lot of these really troubled companies. And it seemed like the market kind of passed over the unemployment and really focused on hope for the future when it comes to the US and world economies. This $2 trillion stimulus package mainly focuses on a one-time payment to Americans, and it also goes into, I think it's $500 billion to bail out major U.S. corporations. And that's a main reason why the airline stocks were up a lot last week. Also, just wanted to point out that the cruise line stocks that I talked about in the past are not getting any aid from this, and also the U.S. oil producers have not been included in this. But it appears like these oil producers in the U.S. are really going to need help from the federal government to survive, as they're getting priced out from the price war of oil that I mentioned prior. So it appeared like investors saw this the stimulus package going through as a really good sign for the overall state of the economy and the stock market. And as a result, we had the best week in 80 years. So it seemed like people were looking towards the hopeful side and not looking to the long-term potential damage that we're seeing from the coronavirus. One way that I found this morning to kind of gauge investor sentiment is by looking at the ratio of puts to calls. Calls for when you think the stock market's going to be going up, and puts are for when you think it's going to be going down. And as you see by this chart right here, puts peaked in January and earlier this month in March, and they've really plummeted, which means that calls are becoming the more dominant factor for the options traders, meaning that people think that the stock market's going to be going up. And the fact that it's fallen down to pretty much 12-month lows kind of is an eye-opener for me. We had some really dark times in the past couple weeks, but it seems like people are looking a little more optimistic towards the future, and that's why the calls are becoming the more dominant factor in the options market. Also, just wanted to point out that I did not forget I'm still working on my options video, trying to talk about my favorite ways to trade options and the different ways that you can do that. So that'll be coming out in the upcoming weeks. Based off of that chart that I showed, the article that I found that in described that as people showing extreme levels of greed, based off the fact the incredible change from the put to call ratio in the past week. So people were very optimistic, and they're even calling that as extreme greed on this article. So it's something to be wary of. And then the big news from this morning is that Johnson & Johnson, ticker symbol J&J, and Abbott, they came out to say that they're getting pretty close to doing human testing for a potential coronavirus vaccine. And the stock market really liked that because it's a lot of optimism and hope about the future. But if you read into the article a little bit more, they're not going to be starting the actual trials until September, and if things go well, they're not going to be expecting the vaccine to be available until early 2021. So that's still a long way away. But for the short term, the optimism seems to be pretty high in the market right now. The stimulus bill, in addition to the potential breakthroughs for the medical field, has investors pushing the stock market up pretty high. But I'm going to start laying out the reasons why I personally think that the stock market's going to fall. Obviously, this is my opinion, and you should definitely do your own research before making any decisions. The first factor that I want to talk about is the fact that the investors kind of passed over the fact that they had a record number of unemployment claims in the past week. And from the Fed news today coming out saying that they expect that it's potential that there's going to be 30% unemployment in the next couple months was really alarming to me. And it seems like that's not getting as much attention as it probably should. When I went back and I wanted to look at the financial crisis of 2007 and 2009 just to kind of see what the unemployment was like around there, and the highest it went was 10%. So 30% is an incredible jump over what we've seen in the past decade. When we're talking about the U.S. economy and the world economy, this unemployment level should be very scary for investors, and it's making me feel a little bit hesitant, even though we just had the best week in 80 years. So that 30% is probably not going to happen, hopefully, but it's the potential bounds for what we may see. There's so much uncertainty right now, and the Fed coming out and stating 30% as being a possibility is making me feel very bearish about the market right now. One of the main impacts that we're likely going to see if it does hit 30% unemployment is while there's going to be companies that are going to be able to do decently well during this time as a result of remote working and stuff like that, the fact that 30% unemployment in the US is possible, the amount of cash that's going to be transferred between people and other businesses is going to really drop as people kind of hunker down to protect themselves from a potential recession. So that's kind of the main thing that I'm watching. And the counterpoint to looking at the best week that we've had in 80 years, and when I went and looked at this article, they had a graph that showed every time the S&P 500 jumped between 9 and 19% during any week during the financial crisis of 2008, there were 6 different times that happened. And so this is not an unprecedented bounce for the stock market. Sure, we had the best week in 80 years, but these type of bounces have been seen a lot as the market continues to fall. This is the idea of a bull trap, is that it starts looking good for a couple days and then it continues to slide as the people start taking their profits and the signs about the worsening of the economy start to come out. So I'm kind of expecting to see that in the upcoming weeks. We're seeing more and more horrible information coming about the state of the coronavirus, how it's affecting the US especially, and kind of the timeline for the easing of this pain. And while things have been good for the past week, I'm not ready to make any conclusions about thinking the stock market's going to recover. I think it'd be really naive to think that after 3 weeks of pain from this unprecedented level of shutdown, that we had 3 weeks of pain, it recovered for 1 week, and now we're back into a bull market. Based off of the recovery, being up 20% from the bottom that we saw a couple weeks ago, we're officially in a bull market again. And I think it's really naive to think that's going to continue. We just have no idea what the overall damage of coronavirus is going to be. There's a lot of speculation out there, but we still really don't know. The further we get into this, the more damage we're actually seeing. So I'm going to be playing this from the sideline. I don't intend on adding to my positions anytime soon. I'm going to be waiting for future drops in the market to slowly add onto my positions and take advantage of the dollar cost averaging. So until then, I'm just going to be waiting from the sidelines, making videos and trying to get as much information out as possible. So let me know which direction you think the stock market's going to be going and what you thought of the information I presented in this video. Let me know in the comment section down below. Thanks for watching, stay inside, and I'll see you in the next episode.